It's time for the Your Personal Bank Show with Ference Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of a bank in formation. Take charge of your financial future with Your Personal Bank. Now here's Ference Toth.
Welcome to Your Personal Bank Show. And hey, I'll tell you what, folks, I'm going to really encourage you, if you didn't hear the show from Tuesday, go to yourpersonalbank.com, check it out. I talked a lot about the recent political events that occurred, both with the Capitol and other things that have happened over the last year, really, and kind of where we're headed as a country, what could happen, how does that impact our money, what do we need to do to plan forward, and I guess that's kind of where I want to start here. Again, I don't rehash what I covered Tuesday. I think it was very well thought out. I've gotten a lot of positive results. Been sharing some of these ideas with some folks, and just cut through the noise, try to not be too partisan, which I believe is one of the problems today. We can't talk to each other. We can't listen to each other. Families and relationships, friendships are getting divided over political differences. That's sad. We have leaders who are being partisans, not leaders, who are benefiting short-term personally from partisanship and raising the rhetoric and raising the temperature of the rhetoric, which is all bad. We need to find common ground and unity. We need to find areas of agreement, and when we disagree, to do so civilly and just agree to disagree. We don't, I always say in a marriage, if both parties agreed on everything all the time, one wouldn't be necessary, right? I mean, that's part of the human existence. So to shut someone down, and that's one of the things that I'm seeing here that's so bothersome, is to shut down free speech, which is one of the fundamental rights we have as U.S. citizens, as Americans, as a country. Efforts to do that are damaging in the extreme. And anyone, and I would just call for this should be universal. This should not be a political issue. This is a basic freedom issue. The freedom to express your viewpoint without retribution is a basic, fundamental right we have. And anyone who encourages, suggests, or recommends censoring someone because they disagree should be roundly denounced. Period. And that it doesn't matter what they say, whether you agree with them or not, it should be roundly denounced. And I feel very strongly about this because, again, my background, coming as a first generation, my dad was an immigrant, escaped from Hungary, from the Soviets, from communism. See, that's the realm of communism or fascism or dictatorships, where a certain group of people, their ideas get censored and then pushed down. That's communist China today, folks. You can't just stand up and say what you believe. You can get thrown in jail or worse. We're dealing with a situation right now. Let's go in the financial world. Big news has been, recently is Jack Ma, the richest man in China, who said some things about regulators, negative things about regulators, and it really wasn't that bad. He just said basically they're outdated, their methods are outdated to current technology. I mean, that's not roundly negative. That's kind of a fact. You know what I mean? And they took exception to they didn't like what he said. He is getting censored. He's getting shut down. His businesses. He was trying to do a IPO that got shut down. All kinds of things because, well, the government didn't like what he had to say. This is a slippery slope. Is this the direction we want to go as a country? And again, how does it affect our money? Big time. Okay. When you have companies making decisions based on political decisions, not economic ones, that in itself, from a profitability standpoint, is bad financial management. We have companies, big tech companies, that are banning and pushing away customers because they disagree with them. Does that sound like good business practice to you? See, not all of my clients agree with me politically. or otherwise. Nor should they, nor do they need to. Okay? We can agree to disagree. We can be respectful of each other. In fact, it's kind of interesting, and maybe I'm in a somewhat unique position. I don't know. But I have these discussions with my clients, with folks, when people contact me for Money Radio and all that. And I have folks that have vastly different political beliefs than I do. I've shared over and over. I'm open and honest. I'm a transparent on what I believe. I don't shove it down people's throats. I don't make people feel uncomfortable, but I'll discuss and debate the ideas with somebody. In fact, I find that interesting. I find it stimulating, by the way. When somebody doesn't agree with me on a certain topic, I like to find out why. What's the reasoning behind that? Why did they come to that decision, that conclusion? I don't need everybody around me to agree with me. We don't all have to be a bunch of minions, okay? In fact, that demonstrates a real lack of character and content and confidence in yourself as a person if you can't handle hearing something that you don't agree with. I don't understand it. How's that? I just don't fathom that. Okay? That's part of the human existence. And like I said, I think I shared it in the last segment, and maybe if I did this, sorry, I repeated myself. But, it's often said in a marriage, if we both agree on everything, one of us is unnecessary, right? I mean, that would be a pretty dull relationship if there was never any disagreement with anything, okay? A little bit of that friction, kind of creates excitement and passion sometimes, right? That's a good thing, folks. All right? It's part of who we are as human beings. Now, I'm kind of getting off topic here. I didn't mean to do that so much, but I want to share. Let's think about this a minute. Where are we headed as a country? What's going to happen? What kind of political system are we going to have? What kind of, we now know our situation where, we have a Democratic president, House and Senate. Most everyone across the board agrees that taxes will probably be increased. Regulations are going to be increased. I mean, those are kind of basic standard things that we see, the Democratic Party do on a regular basis. I mean, that's historically what they've done. I mean, that's not being political. It's just stating a fact. There's other things that they want to do with the green deals and they want universal health care and all these kinds of different things they want to put into place. Okay. The thing is, those things cost money, which means taxes, again, either raising taxes or whatever, those kind of things. So how do we plan for that? Well, certainly for the next 2 years, till the midterm elections, we have to kind of plan for accordingly. If tax rates do increase, then anything that would help reduce your taxes would be worth exploring, wouldn't it? Your personal bank does that. We can create tax-free income. We can grow money on a tax-free basis. You can access it on a tax-free basis if we set it up properly, which, by the way, we do. And thirdly, you can pass it on to your heirs on a tax-free basis. So there's a lot of powerful, in fact, the personal bank concept, using high cash value policies and all that, one of the number one reasons is people do it, particularly high wealth, high net worth individuals do it, is for the tax reduction of taxes. So it's probably one of the most common uses of this. So if you're looking for solutions to reduce your overall tax liability because you're concerned about the future tax rates, contact me at yourpersonalbank.com. Okay? We'll discuss it. We'll show you what we can do. We'll help you address that situation. Stay tuned in the next segment. We're going to talk about some of the other things, regulations and various things that we see going forward.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
All right, welcome back. We're talking about some of the things that we see coming forward with the new administration and where things are going. And first, we talked about in the last segment taxes. Most people believe with a Democratic Congress and presidency that we'll see higher taxes in the future. So again, if you're looking at reducing your income tax liability, both in the short and longer term, we need to talk. Contact me at yourpersonalbank.com. It's one of the main key benefits, one of the most commonly understood benefits that high cash value policies can provide is, again, tax-free growth, tax-free access, and tax-free to the heirs, again, if it's set up properly. Another one that I think is pretty much universally understood is, we're in this very low interest rate environment, primarily because of the COVID shutdowns and the impact it had on our economy. If we have an increase in taxes and regulations, which most people believe will happen, then the likelihood of a slower economic recovery is very, very likely. So, and again, we're just based this on history. I'm not being political. I'm just based on what's happened previously. And so if we have a slower recovery, the Federal Reserve has basically stated they're going to keep this low interest rate environment in place until we approach closer to full employment, for example. We're still at many cases around 10%, give or take, unemployment levels, which is pretty high. It's really high, actually. And so it could be a number of years. And again, that's dependent on the economic recovery, how long it takes before we get to a quote unquote full employment situation again, like we were pre-COVID. That means a extended continuation of the low interest rate environment. The problem, of course, is folks who are trying to live on fixed income, any income source that's reliant on interest rates like bonds and various things like that to say supplement retirement are struggling. CD rates are in the basement, right? Bond rates are historical generational lows. I heard last week somebody mentioning that we're in the lowest interest rate environment since 1787. That's a long time, folks. Trying to go into retire or be retired and supplement retirement in this extraordinarily low interest rate environment is extraordinarily difficult. You're faced with a situation where you take the lower returns, which may not be enough to live on income-wise, or in many cases what I see folks do is they're forced into taking on more risk than they're comfortable with to try to obtain a return that's acceptable or adequate. See, the problem is when you take on risk, market risk, let's say, and let's say you are retired, so you're in a position where if there's a loss of asset value, you can't replace it. You can't go back to work and earn income and replace it. The risk is much, much higher then because you don't have the ability to replace that loss through future income, going back to work or business or whatever. So that's why it's generally understood and it's generally accepted, and most people try to reduce their risk as they near and go into retirement because of the inability to replace that if that turns into a loss. So you can understand why many folks who are retired or nearing it are reluctant to take on more risk. In fact, they're trying to do the opposite. They're trying to reduce their risk profile. It just makes logical sense. Again, the problem is where can you go? You can have even a decent interest rate these days. Some people use annuities. I've used those with some clients to guarantee an income, lock in a guaranteed income rate, and you can still get rates of returns on those, 6% or so, okay, depending on the company and your age and the situation. And, if you listen to Money Radio, you've heard a lot of other folks that are on, I listen to the station myself who talk about those very things. And that's a very viable option. Don't get me wrong. We deal with those also. So if you have any questions on that, or, you have a question about that and you want me to share with you on it, even share the question, the answer, I should say, on air, I'll be happy to do that. Just contact me at yourpersonalbank.com. Let me know you have a question you want me to answer on air. I'll be happy to do so. Or if you want to talk in person, we can do that too. Your Personal Bank is also another solution. I tend to favor that one for several reasons. I get asked that often by folks who are looking into this or clients, and I'll share with you some of those reasons. Why do we look at the personal bank option versus an annuity option oftentimes? Not always, but quite often. And the reasons are pretty straightforward. First of all, as you've heard me talk about many times, it's a tax situation. Depending on a person's taxable liability, both now and in the future, an annuity can defer taxes, which is a good thing, like an IRA does. Okay, a traditional IRA, I should say. But the problem with that is, of course, when you do access the funds and take it out, you ultimately do get taxed on it. And it's all that, is it better to pay tax on the seed or the harvest kind of thing? I've talked about this many times. Do you pay taxes on the contribution, the amount you contribute, which is usually a smaller amount, or do you want to pay taxes on the harvest when you access it after it's had a chance to grow? That's a discussion that we have with clients all the time. And the answer really is it depends. It depends on your age, your situation, what the growth rate is you think on those monies. Does it make sense to pay tax on the contribution or on the distribution side, right? Well, your personal bank offers you the ability to take monies and put it in. It's after-tax dollars, of course, but then you can grow them tax-free, income tax-free, I should say. You can access them through policy loans or through the bank lines of credit, which is how we really recommend it. Get that positive arbitrage, right? On an income tax-free basis. You can also pass on a death benefit, which is typically many times larger than what you contributed, multiple of what you contributed to your heirs. So when those issues come up where you want to address several solutions at once, especially from a tax standpoint, your personal bank can be a great solution to that, okay? The other one is liquidity. See, one of the big knocks on annuities, and they're good, and I like annuities for a lot of people for a lot of reasons. Like I said, the guarantees, the guaranteed income you can create through an annuity is nice and a great solution for many people. Despite what you hear sometimes on some of the negativity around annuities, the negativity that you get is about liquidity. And it is true that annuities don't have a great level of liquidity like many other assets have. In fact, most annuities are set up where you have 10% free withdrawals annually. So if you're going to access any of the additional funds over and above that 10%, you've got surrender penalties involved. And oftentimes, anywhere from 5 to 10 year time for the next 5-10 years, right? And eventually those surrenders do fall off, by the way, in most cases. So the negativity around annuities really revolves around, what if you need more than the 10%? What if you need a bunch of your money, a chunk of it? And an annuity is not a good solution for that scenario. That's true. Now, when people are supplementing retirement and they want to supplement income, that's usually not the first thing. Liquidity is not their primary issue, so that's why it can be a good fit. But the beauty of your personal bank is we have anywhere from 50 to 90% liquidity day one. So depending, again, on how we set it up and all that good stuff. So you add the tax benefits, the guarantees, you get the rate of return that's among the best, especially today's in the fixed arena, and you add the liquidity into the picture, well, gosh, we've just taken away the major negative annuities, haven't we? If and when you do see an emergency or an opportunity, you want the funds, you can access them. That's a nice thing. And for a lot of people, that's what they prefer. So I'm going to go into the last reason why we tend to view personal bank over annuities, for example, in the next segment. That has to do with rate of return, so stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
All right, welcome back. We've been talking a lot about those folks that are looking for a way to supplement retirement, fixed income, have some relative, some guarantees, some safety, some consistency with their money to supplement retirement. And the choices are rather limited today in terms of being able to find something with a decent return with the low interest rate environment, historically low. We often refer people or recommend the personal bank as a solution. And oftentimes even over annuities, not always, but oftentimes, and the reasons behind it. See, I'm comparing it because a lot of people are listening or have some experience or knowledge, and many have annuities, and they've done them for multiple of reasons. They're wanting some diversification. They're wanting some guarantees or safety that annuities offer that, which is a positive for many, especially in light of what's been going on recently. But that's been true all along, frankly. Some of the guaranteed income and things you can create to supplement retirement with annuities is good. The rates of returns are higher in often cases than certainly CDs and things like that in the last decade or more. And oftentimes more than bonds and all that too, with additional guarantees on top of it and tax deferral. Tax deferral is better than taxable, typically, not always, but in many cases. But all those benefits are good, and when you look at all that, but when you compare it to a personal bank, it's like taking it to the next level. Okay, so it can match everything an annuity can do, and then some. And what I mean by that is, tax-free growth and access is better than tax-deferred. I think anyone would agree with that. Liquidity, a limitation on annuities, is not with the personal bank, and I think nearly everyone would agree with that. Again, we got 50 to 90% liquidity day one. Rate of return. Here's the thing, it's interesting. In general, high cash value policies pay a higher dividend than most annuities pay. And the reasons behind that, there's a number of reasons behind it. And like I said, what rates are being paid? What rates can you get today? We still have companies paying 6% today. We have companies that have been paying dividend rates of that, upper 5s and 6% every year for the last 25 plus years and never missed a dividend since before the Civil War. That's powerful. Annuities don't have that kind of track record. They haven't been around that long. I mean, they've been around a long time. Don't get me wrong, but not that long. Okay. So you have a very, very well established product with the personal bank and the high cash value policies. Okay. Extremely well established. You have the extremely strong long-term history. Another reason behind that is interest rates impact annuities more than life insurance. So annuities are based on, current investments. Without getting into a whole lot of detail, low interest rate environment definitely affects annuity returns. Like I said, they're generally as good or better than bonds today and have been for some time. And if you want to compare, we'll be happy to do that. Contact us at yourpersonalbank.com. We can show you the rates, okay, of what the annuities are paying. And you'll see immediately. It'd be pretty obvious. But personal bank, high cash value policies tend to pay even more. And part of the reason is they're not subject to the whims, ups and downs of quarterly returns so much. These are based on, these companies are investing this money over your lifetime. Okay. And as I always point out, when you get approved and you get underwriting, they have an approval, they have made a determination with statistical accuracy of somewhere around 98% of your longevity. Now, they don't know exactly how long you personally live, but it's a group of insureds. So if they put 1,000 people in a group, they know with a 98% statistical accuracy how long they're going to have the money to invest. And I always tell people, look, if you knew you had 10 years or 20 or 50 years, whatever it is, to take this money you're giving them and invest it, and you knew you had that amount of time that you could invest it with a 98% accuracy rate, would you be able to be profitable? The answer is, of course. Okay, and so that's all they've been doing all these decades and decades, some of them for over 100 years. Okay, so my point is you can get a higher rate of return typically with a high cash value policy than you can with most annuities. That's just a fact. It's math. Okay, like I said, 6% dividends are still available today and have been consistently over the last 25 plus years, and with companies never missing a dividend since before the Civil War, which brings me to my next point. What about consistency, safety, guarantees, things like that? Well, again, I just stated it. They've been around since before the Civil War. If you're concerned about the future or what's going on and things like that, and uncertainty, I'll put it that way, well, this is a product that has survived the Civil War, the Great Depression, multiple wars between, and everything else, with a consistency unrivaled to anything else. Okay? So it's just kind of, if you want inconsistency and with guarantees and you want to generate some income, you'd be hard-pressed to find something with a longer, better track record than a high cash value policy. I'm not aware of anything that'll do it or has a better track record of history. And what's sad is that's not common knowledge. It should be. It's been kind of discounted or put to the side or not shared very much, but that's the reality. But the last reason here, and this is the one that really makes the whole Your Personal Bank concept unique, is the ability to create the positive arbitrage on money you spend or use. And what do I mean by that? Again, it's really quite simple. We set up a high cash value policy. You earn dividends on that. We got companies, like I said, that are still paying 6% even today. You then when you decide to access the funds, you can do so. We set up a bank line of credit using the cash and the policy's collateral. The bank lines of credit are in the 3 to 3.95% range, depending on the amount of funds. And the point is you keep the difference. So when you spend money, which we all do, you actually, if you're getting credited, let's say you're getting credited 6% and you're getting charged in the 3s, what's your money doing? You're still keeping the difference. You're still making some money. And remember, here's the major key. Here's the big idea, the game changer. Remember, that's on money you spent. See, where else can you spend money? You take the funds, you actually spend it. And I don't care what you spend it on, but you spend it on debt or bills or opportunities to invest elsewhere. You spend those funds. Normally, in any other scenario we can talk about, what kind of return do you get on those dollars after you spend them? The answer is obvious. Zero. Nada. Nothing, right? They're gone. You spent them. You used them or you reallocated them. You bought an asset, but those dollars are gone, right? Not here. Here, because you access the funds. This is where the light bulb comes on for people. And this is where I have fun explaining this and educating folks. Did you access the funds from the insurance company or the bank? Remember, we're using a bank line of credit to access the funds, the cash and the policies, the collateral, right? The funds are coming from the bank, which means the cash, the funds are still with the insurance company. They're still earning interest, dividends, whatever, right? It's still growing. And with a consistency unrivaled, right? And again, we got companies that pay up to 6% today, still. Been doing so the last 25 years. I'll show you the charts. I'll show you the history. Have been doing so since before the Great Depression without missing a single year. That's powerful. That's incredibly powerful, folks. Regardless of what happens with our country and our economy and our politics or any of that other stuff, they just keep rolling along and keep paying dividends and have so for 150 plus years. That's incredible. That's powerful. And again, you have the opportunity to earn interest to keep the difference on money that you actually used and spent elsewhere. Does that mean you'll have more money? And the answer is, of course you will. That's pretty obvious, right? So like I said, contact me at yourpersonalbank.com if you have questions or you want to look into this further. Or if you have a question you want me to answer on air, contact me. And stay tuned for the next segment. We'll wrap this up.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
All right, we're rounding third and we're wrapping this up today. We've talked a lot about, a little bit about what's going on with our country. I really talked a lot about that in the previous show, which I'm going to encourage you if you missed. Check it out, yourpersonalbank.com. You can listen to any of the previously recorded shows. But with this level of uncertainty that I believe we're at this point in time with our country, with our government, with our economy, with what's going to happen going forward? Are we going to have more social unrest? Are we going to find unity? I don't know. But There's certainly, I believe, and I know because I'm dealing with them on a daily basis, a number of people that are concerned about their money, about the safety, about the risk. They're wanting to put something away. They're wanting to supplement retirement or get something put together for retirement. They want to have some income. The low interest rate environment, the extraordinarily low interest rate environments, has really put a damper on returns on fixed investments. And that's why I was sharing earlier, on this earlier segments today about why, if you're considering an annuity or you're looking for a fixed income investment or you're wanting to reduce risk. And by the way, a lot of people believe the taxes are going to go up now that we have a Democratic government, House and Senate and presidency. If you're wanting to reduce taxes, have a decent return, get a decent return, some consistency, supplement income, and you're considering a fixed investment, I can strongly encourage you to contact me at yourpersonalbank.com. Look at this as an option. This is an option that has more track record and history than just about any other financial tool that exists. It has the benefits of the tax benefits. It has the guarantees and the safety. It has the liquidity. And then lastly, but not least, probably the most important, it has the ability to create positive arbitrage by accessing the funds through a bank line of credit versus the policy. You're earning more in the policy, you're getting charged, you keep the difference, which means you have more money in your pocket, which means you can supplement retirement further and have more dollars to live on. So like I said, contact me at yourpersonalbank.com if you want more information or if you have any questions or if you just want me to answer a question on the air. Please feel free to contact me on that. I guess I want to kind of wrap things up today, the last few minutes here, on the current situations we're dealing with. And I just got to say I'm saddened. I'm disappointed. I'm frustrated. I'm saddened. And at the same time, I understand that we're at a point in time where there's some extraordinary opportunity. The level of rhetoric and temperature, politically speaking, on both sides of the political aisle today as at or near all-time highs. The passions that people are feeling, the frustrations, all of those things, again, near all-time highs. I thought this. I said this. I know there was a lot of people frustrated about the last election on particularly the Republican side, particularly with the Trump supporters. And I thought, the holidays are coming. There's a lot of frustration. I get that. The holidays came and went, and I thought maybe some of that might subside a bit. And when I came back, started listening to the radio and various things and paying attention to what's going on out there, no, it was the opposite. If anything, it was more heated. It was more anger, more frustration. And it boiled over last week. The response to all that has been even more disappointing in terms of more efforts to divide, more restrictions. Now we're looking at restrictions on freedom of speech, on institutions and people, unlike I've seen in my lifetime. I find that extraordinarily disappointing. I think free speech should be a topic that should be universally agreed upon as a fundamental right of Americans. It's in the Bill of Rights. And anyone who suggests or recommends censorship of an entity or person because they disagree with them should be roundly denounced. And I don't care whether they agree, disagree. This should be universal. I'm not talking about people who's inciting violence. I'm not talking about that. I'm talking about political, genuine disagreement. When one person or entity disagrees with the other. Because folks, right now, yes, the Democrats have the House and the Congress and the presidency. That won't be forever. It can go both ways. That's what the folks that are calling for these censorships and all that are not looking at the bigger picture. I guess I don't know, but it could happen to them too. But even more concerning, and again, this is from personal experience, family history, family experience. My dad escaped communism. This is a slippery slope. When you censor free speech, you're entering into the realm of fascism, communism, or dictatorship type governments. And if you're going to censor how somebody thinks, feels, or believes, that will impact companies, that will impact profits, that will impact our financial future. You do realize economic freedom is part of being free. You know, people that are reliant on government, for example, are not truly free. So do you want to be reliant on some entity like government, or do you want to be independently, economically free? You see, you have the opportunity to do that here in this country. Many parts of the world today, you don't have that option. That doesn't exist. And that hasn't existed throughout human history most of the time for most people that have lived in most governments. So the fact that we even have this opportunity that we can become economically independent of anyone else, including government, is a fundamental right. That's called the pursuit of happiness, which I believe is in the Declaration of Independence, isn't it? You see, we either have a country that has an agreement in terms of our basic principles, what we stand for as a country, or we don't have a country. We have to find those points of unity, or we won't be a union anymore. And if civil unrest, anger and frustration and all these things are allowed to maintain and build at a peak level and continue to build, sadly, it'll only get worse. It will impact the profits of companies. It will impact portfolios. It will impact tax policy, government policy, our basic freedoms, our ability to earn money, our ability to keep money, and our ability to put money away for the future. It will impact all of those things could potentially be in a very, very negative way. So, although this is a money radio show, this is focused on money and your personal bank, which, by the way, allows you to take control of your money back. These political aspects are all important and involved with this too. So, if you want to gain economic freedom and break from the system, your personal bank is an option to consider. So contact us at yourpersonalbank.com for any questions. Want to look into your situation, or if you just want me to answer any question on there. And as always, stay tuned to the Your Personal Bank show on Money Radio.
Listen Tuesday at noon and Thursdays at 1 for more information on Your Personal Bank. Contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.